Disclaimer: this is not financial advice. Please conduct your own due diligence, DD, or consult a certified financial expert. This content is for informational and entertainment purposes only. The idea of making millions in the stock market often sounds like easy and quick money. This get-rich-quick allure attracts many newcomers, yet the reality is that the majority of traders end up blowing up their accounts. While a few lucky novices struck it rich during phenomena like the crypto and meme stock booms, they are the exception. On the other hand, professional traders with deep knowledge rely on technical charts and patterns. By identifying which setups are likely to trigger a massive run, these professionals have the discipline to hold for maximum profit. If they get it right just a few times, the gains can be astronomical. Novices, by contrast, rely primarily on luck and often take profits prematurely. To capitalize on these opportunities, you must be active in analyzing charts for high-potential moves. Imagine investing $20,000 and achieving a 1,000% gain. You would only need to succeed twice to become a millionaire. It is entirely possible. I have witnessed it firsthand many times. However, the market remains unpredictable, and stocks often surge when you least expect it. In the rest of this video, I'll share specific chart patterns to watch, along with the catalysts that provide the fuel for a stock to make a massive move. As I mentioned in the How to Start Trading Stocks video, you must stay aware of global events, such as wars or pandemics, as they unfold. Keep a close eye on stocks exhibiting distinct, bullish patterns and research how these events might impact them. These stocks can potentially become meme stocks when short sellers are caught off guard. These scenarios often occur due to sudden massive volume followed by a slow gap up, which leaves short sellers trapped. During the COVID-19 pandemic, for instance, many traders were unaware of the scale of the events about to unfold. However, biotech companies specializing in treatments or vaccines saw massive gains. Also, whenever companies announce progress on a breakthrough such as in technology or science, the stock can surge. This is what is known as a hype run. High-momentum stocks frequently exhibit a consolidation period characterized by low volume immediately preceding a major catalyst. This quiet phase suggests that some market participants may be anticipating the news before it becomes public. Since most retail traders lack this foresight, technical analysis remains the best tool for anticipation. To identify what adds fuel to these runs, here are 5 key factors to look for alongside your chart patterns. 1. Short interest. The higher the short interest, the more likely a stock is to trigger a squeeze. High short interest creates a scenario where demand far outweighs supply. As buyers continue to bid the price up and fewer shares become available, the stock moves upward rapidly. Simultaneously, short sellers may panic and rush to buy back shares to close their positions, adding even more fuel to the upward momentum. 2. Volume. Stocks experiencing this type of run usually exhibit massive daily volume spanning multiple days. In extreme cases, we see over 1 billion shares exchanged in a single trading day. 3. Float. A subset of outstanding shares. The float refers specifically to the shares available for the public to trade, excluding restricted or locked-up shares held by insiders. Generally, the lower the float, the faster and more volatile the price movement. 4. Cost to borrow. This is the annualized fee a trader pays to a brokerage for the privilege of borrowing shares to sell short. For those looking for a squeeze, the higher the cost to borrow, the better, as it puts immense pressure on short sellers to exit their positions. 5. MACD, Moving Average Convergence Divergence. If you aren't familiar with how the MACD works, I highly recommend mastering its mechanics. Most stocks that undergo massive parabolic runs exhibit remarkably similar MACD technical setups before the move begins. Take a look at these 3 stocks, MGRT, SNDK, and AKAN, which have each surged approximately 1,000%. You will notice they each exhibited remarkably similar MACD patterns immediately before their massive breakouts. Now, let's analyze each chart pattern. First, MGRT, 180-day and 4-hour charts. Take a look at the area highlighted by the red rectangle in MGRT. Do you see the breakout pattern between March 2nd and March 30th? Now compare that to the 1-year chart. You will notice this same period mirrors the structure of the 180-day and 4-hour charts, but within a much smoother upward curve. Next, SNDK, 180-day and 4-hour charts. For SNDK, Look at the area highlighted by the red rectangle. Do you see the breakout pattern prior to September 1st? Now compare that to the one-year chart. You will notice this same period mirrors the structure of the 180-day and 4-hour charts, but within a much smoother upward curve. Finally, AKAN, 180-day and 4-hour charts. For AKAN, look at the area highlighted by the red rectangle. Do you see the breakout pattern between April 6th and April 20th? Now compare that to the one-year chart. You will notice this same period mirrors the structure of the 180-day and 4-hour charts, but within a much smoother upward curve. You can replicate this by looking for stocks that have run massively. Analyze the 180-day, 4-hour, and 1-year, 1-day charts to see if they show breakout patterns similar to the ones we discussed. Please subscribe, like, and turn on notifications so you won't miss my next video. Also, don't forget to leave your comments below.